All right, everybody, welcome to this evening's ACY Securities webinar. My name is Duncan Cooper. Tonight it's Forex Trading Live Market Analysis. So we will go through the trading levels I'm watching, go through the trends, discuss what's been happening in this very volatile market. So before we do that, please read through the risk disclaimer. Any information provided tonight is just general of nature. You're making your own trading decisions. You're responsible for your own trading decisions. So just read through the risk disclaimer for me. All right, moving along. If you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor at ACY Securities. I'm a full-time trader. Been now full-time trading for more than 15 years. Or trading the Forex market for more than 15 years. Not full-time trading for 15 years, but trading the Forex market now for more than 15 years. Just trying to count in my head, it's more like 17 years. Mentoring clients for more than 10. If you want to contact me, then simply shoot me an email, duncan.cooper@acy.com. As well, through the week, you can get my information on our website, my analysis at acy.com market news tab, at our YouTube channel, ACY Securities Australia, and you can connect with me on Twitter and LinkedIn if you want to. They're my handles. Plus, through the week, in our Telegram channel, you can connect with me. If you don't have access, just contact Nathan Bright at acy.com, where I'm providing analysis based around the webinar theory that I teach, trading style, method, looking at trends, support and resistance, the trading levels that I'm looking at through the course of the week or the day. As well, if you want to get access to my charts, simply email Nathan and he will get back to you and help you set those up. Excuse me one moment. I think Nathan's been on leave, but he should be back on Thursday if you're waiting for an answer from him. His partner's had a baby, so he's having a bit of a break. I'll put his details in the chat now, and then if you want to contact him, you can. So if you've got any questions about anything, just contact Nathan about opening an account, upgrading an account, whatever your question might be. He's the man to contact. His email and details are in the chat there. All right, so let's just have a look at what news is coming out for the week or for the next couple of days in any events. All right. So we've got Fed Powell speaking. These are New South Wales time at 9:30. I don't think it's of any importance. It's something to do with digital currency. Bank of France in Paris is conference calling or doing some form of hosting, talking. I don't think that's going to affect the market one bit. So at midnight, moving into Wednesday, we've got the CB consumer confidence, so that could affect the US dollar crosses, pairs. All right. Other than that, a few members, there's a member here from the FMC talking at 11:55, but I don't think they're going to say too much that could drive the market. All right, we got into Thursday, 10:30 p.m. for Canada GDP figures. New Zealand, 11 p.m. Thursday, Governor Oz speaking, and 10:30 p.m. Friday, we got the core PCE price index. So it's a much lighter week for news, even though it's been still very volatile. Not too many bank interest rates, decisions, stuff like that to have to try to move your trading around. So let's get into the chart. So just that one on the midnight for the US CB consumer confidence. So what we are seeing today is a little bit of US dollar weakness. Pairs to the US dollar are moving up a little bit. Not changing the trend, but we're definitely seeing a little bit of US dollar sell-off. So we'll just have a look at the dollar index. This is the day chart. You can see there on the monthly, if I zoom it out, it's just in an obviously mega uptrend. How long can it go? We've obviously done the range for the month, so we might see a little bit of selling pressure at the end of the month. Although it could still keep going up. Here's the weekly look, still going up. Sorry, if I just go back to the monthly, I mean, the next major level is the high up here at 121, and we're trading at 113. So there's another almost 114. So there's another seven points to the index that it could move up to test that level. Whether or not it's getting to that level, we'll have to wait and see. So I'm not seeing anything that's telling me that the trend is changing, other than we're a bit overextended, quite obviously. We haven't had a day down in 4 or 5 days, so we might see a little bit of profit taking. All right. So before I came on, I was just looking at a few pairs on the 15-minute charts, just noticing that some are starting to pull back to their central pivot points. Dollar Canadian, it's just having a bit of a sell-off today. So you could be watching, you can see this is one of the first days that this pair has been moving below the central pivot. It's just coming out to test the figure. 37.15 here is weekly resistance. I did a video on this pair today. This is majorly overextended. Is this monthly resistance here at 37.92 that we traded at last night, early morning. We've sold off from that level a little bit. We're 100 pips down from that level at the moment. And you know, I'm just contemplating long term, is this level going to hold? Are we going to get this left shoulder head, right shoulder formation? So until I can see a setup to trade, I'm not going to trade. Now the weekly trend's still up. You know, if we get a nice negative week this week, showing a negative candle, 62% level of the major range here. So we are withdrawing from monthly resistance at 137.92. Weekly resistance here at 37.15, and notably today you can see that we're having a negative day, and we are holding below the weekly resistance level, so we're just popping back up intraday. Now it's obviously your choice. How much confirmation do you want of a change in trend? I don't know whether we're getting too much confirmation on the higher time frames, but if we've obviously moved back below weekly resistance, got some form of selling pressure there at the figure. So we may well see this moving back up to the pivot here at central pivot at the moment, the figure, and that weekly resistance level. Depending on your thought process, you may see further failure in that area today. Just depends how much change of trend you want to see on the J chart perspective before, you know, maybe looking to sell this. I'd much prefer to see on the daily chart, you know, like the formation of a lower top, which clearly we're more than a few days away of seeing that. But notably, we're at a very good level where the market could turn. It's just how much confirmation do you want for the turn? Well, assuming that we're going to turn. I mean, today we could just trade all the way back up and go above the high of yesterday. But at the moment, we've been having some selling pressure. We're in an area where it could want to sell down from. And we'll go to now the euro dollar. Having a bit of a sell-off through London at the moment. But again, notably, this is the opposite look at the moment. We are back about, we're trying to hold maybe at the central pivot point here. You could watch this area. Most of the day, we've been at or above the central pivot point. So is it going to be able to hold above that level? You can watch that. Central pivot, if you don't have my pivots, our central pivot is at 96.22. Now on the day chart, just to show the levels, 95.59 is a monthly support level from back in time. If you go to your monthly chart and go back 20 years or so, you'll find it. So we're having a bounce at that 95.99 level, getting some minor support. We've obviously broken below these weekly support levels that were at 99.52, 99.04 from back in time, and broken below day support now at 98.64. So it, like all the pairs at the moment, they're overextended. Doesn't mean to say they can't move further down, but you know, weekly chart here, if you draw the fib across the current range, we're down at the 162 extension. All right, is that really where you want to sell? It's not where I want to sell anyway. I'd like it now to retrace back up, see how it moved down here, back up to a 62 level. Well, I'd like the same thing to happen now. The trend is clearly down, but I don't want to sell it at the bottom of the trend, the bottom of the most immediate trend. So wherever the low can come in, I'm going to, have my fib there. I can see at the moment the 62 level lines up with the 99.50, 99. What was that level again? 99.52 weekly broken supports. So I'm just waiting to see if this can move up the range back to what should now be clear resistance. There's daily resistance at 98.64, weekly resistance at 99.04, 99.52. So just that area, 62 level lines are at 99.54 at the moment, if that is the low. So looking to sell a rally, keeping with the dominant trend. Now, of course, you might want to go the opposite way, but the structure at the moment, it's a bit messy on the 4-hour, but we are getting a cross up on the MACD. If you started to see a 4-hour structure, an uptrend structure that you could trade to the upside, fine, we go back up to resistance. But, if you're going to go counter at the moment, you need to see obviously nice, strong structure that makes sense. And I'm not seeing strong structure there at the moment. You may see, as I say, support coming in at the central pivot point during the day. It's been above it for most of the trading day at the moment. This may come down at the moment, back down to the monthly support level. We've got 9,600. What did I say that level was? 95.99. So pretty much 9,600. That could offer support. We're 18 pips away. So you might find that gets support. Got support there yesterday 3 times. So with the sterling sell-off in Asia, bounce back up through New York. Any dips below 96 at the moment are being met by the bias. So if you're wanting to trade to alongside 9,600, may well be a good level of support. Try to initiate maybe a move back up the range, but don't forget where the long-term trend is. And I've got these levels that I haven't discussed. These are weekly levels from back in time, 96.91 and 97.08 that we've moved below. So bear in mind those levels as well. So at the moment, you can see yesterday's trading was stuck between 9,700 and pretty much 9,600. Yes, we did slip below there, but so that's the general range at the moment. So that's what price is telling you. That's where the buyers and sellers are operating between. So look at where the bottom of the range is, 96. Look where the top of the range is, 97. Unless we get some strong price action, don't expect maybe the market to move out of that kind of range at the moment. All right, so Euro Yen. Now, I did put this in the Telegram today. On the day chart, we have had a very nice rejection at monthly support down here at 137.49. If you go to your monthly chart, you'll see an old top there. Got a message coming in. Slavy saying, what happened to that slip yesterday? What, on the euro dollar? While the pound dollar was selling off aggressively, so that followed suit. Yeah, the pound dollar had a very aggressive sell-off through Asia yesterday for a period of time. Well, it was nice if you're in it and it slipped and you were with the trend. All right, so Euro Yen, what I'm seeing here is, if you go to the monthly chart, it's this top here. We pulled back to that level yesterday and rejected and managed to hold above daily support. Now today, we're getting close to having touched daily support once more. We have just traded above the high and said it in Telegram. If we traded above the high today, that potentially could start to confirm the reversal back up. All right, maybe back up to this daily level of support that got broken here in the first instance. So did just have a nasty 4-hour candle at the high yesterday. but the 4-hour trend is just holding. That's the higher top, that's the higher bottom. And it could come down once more to visit 138.68. You know, if it visits 138.68 and holds, then, you know, 138.68 is just above the central pivot point. Today, we haven't wanted to get down there. And I did notice drawing a fib from this intermediary low up to the high of the day, or at the 79% level. Maybe we're getting support there to move back up. You can make your own decision about that. We may obviously move down to retest the support level, but it's just got an underlying bid to it at the moment. All right, I'm going to start left and work through the pairs. Some pairs I'm just keeping up to date the levels because I'm not 100% sure what's going on. Now on the Aussie Yen, we're obviously in a downtrend here, but the major range from this low to that high, we're at the 62. So potentially, even though we've got all this volatility at the moment, negativity, this could just be a corrective phase down from this move up for us to now move that way. All right. So if you can start to see on the 4-hour chart structure that starts to show support and that we're turning around, then you might want to, you know, start to think about, is this a 62% retracement of this major range for a move up? It's pulled back just short of this day support level at 93.06. So maybe it can dip down a fraction more. Maybe we get support at 93. All right, so look at the 4-hour chart. So the 4-hour is consolidating, MACD is crossing up. There's a fraction of divergence here as well. So maybe we're putting a bottom in here. You can, you know, we don't have an uptrend structure here yet. But if we start to form an uptrend structure, then you can start to look for the opportunity to get long. You know, does it come up to make a higher top? Does it give you a pullback to the 62 or the 79% level where you can engage to try to trade a higher bottom formation for a continuation pattern to move up? All right. So the 4-hour trend there hasn't yet turned to up, but it's definitely going sideways. There's a bit of divergence down here. So it may well be starting to want to structure itself that way. You'll just have to monitor to see how price unfolds. All right, the Aussie dollar. Day trend is down. Like I was saying on the euro dollar, this is the weekly range with the fib. We're heading towards, we're below the 127 extension. These levels got drawn in at the moment are from back in time. Got some levels somewhere from back in time. Might have to refresh my memory. Let me just go to my 4-hour chart and refresh my memory. All right, 65.06. Let me just get rid of that fib. Pretty sure the daily levels from back in time, but let me double check. All right, here you go. Squash your day chart in. There are some day support levels that are formed as we made the COVID low and came up. So they could be respected or broken. All right, so I've got a couple of levels in from back in time over there. All right, so as I was saying on the weekly structure with the fib, we're at the 127 extension. So I don't know if I really want to be a seller down here. I'd like to see the next corrective rally come up before I look to sell the rally. All right, this is in the profit taking section of the market. Of course, with the very negativity of the market, this could still want to move down. That's why it's still been moving down. It was trying to get support here, and then through sterling collapsing, we've had a couple of more negative days down. So just be aware we are getting to the end of that fib tool. So if you get caught short and you have a loss so far down, you've really got yourself to blame. Structurally, this really needs to have a rally. All right, and even if it only wants to have a shallow rally for me would be back up to this broken level of monthly support at 66.71, weekly support 66.81. All right, that would be a shallow rally. A better rally would be much more, up to the 62 level up here, approximately. This weekly support, 68.26. All right, now whether or not the market will do that, I don't know, but we might start to see a bottom coming in because this is overextended. So I'm actually looking for a bottom to come in. Can the 4-hour structure turn up? It's not doing that yet. It's wanting to hold through the trading day today, holding itself below the 65 level. We've been up to 65 level, but the 4-hour MACD is crossing up. So a number of pairs are starting to show this formation crossing up in the MACD. Structure on the 4-hour chart is still down, but if we start to see an upward structure, then that could offer you an opportunity to trade up. Be aware of 66.71 to be resistance. So, that daily level that we're below at the moment, 65.06. If we can get some strength to pop above 65 now, you might find that 65, we haven't been below 65 for a long time. This is like new ground for the pair for, this year. 65 could be very discount for the pair at the moment. 65 could become support for a move back up to the 66.71 level. All right. Of course, this can keep moving down, but there's just a few things starting to show that maybe a bottom's coming. This MACD is crossing up for one. And on your 15-minute chart, we're wanting for most of the day to be above the central pivot point. Let's see where we're exactly at. Just click on the 5-minute. There we go. So there's a central pivot point. So predominantly for the day, here's the Asian low. We wanted to hold above the Asian low, and it's been wanting to hold predominantly at or above the central pivot point. Now, for the last probably 3 to 4 days, let's squash this in. We haven't, and this is a case for a lot of pairs, we haven't been really wanting to be above the central pivot point too long. So this is Tuesday, Monday, Thursday, we're above it for a while. Pretty much traded below, became resistance at the central pivot point. We were below it yesterday, couldn't get even close to it today, but today we're wanting to hold at or above. So that just to me starts to emphasize that we could want to be moving up, and we might start to see some days where price wants to hold above the central pivot point to move up. All right. So if we do start to see those days, you can get to the upside. You can trade to the upside and just look at the central pivot point to be support. All right. But at the moment, it doesn't seemingly want to get back above with any strength 6,500. So I think to look to trade to the upside, you need to see a break above 65 tomorrow. The 65 becomes support. All right. Otherwise, if 65 has another failure, you could obviously look at that opportunity to trade down. All right, Euro Yen. I've covered that one already, and I've covered the Euro Dollar already. Just trying to hold at the central pivot. Very similar to the Euro Yen. If you draw a fib from that interim low as well, you're at the 62 level. Maybe we've moved up. We're pulling back to move up. All right. All right, get on to the pound pairs. Now, of course, these are exceptionally volatile. All right. You're going to trade any of these exceptionally volatile pairs at the moment. Make sure you've got your risk properly calculated. Maybe trade less risk. All right. On the weekend, I said, price could on Monday get down to this level of support, but it actually got down to even lower levels of support. These are monthly levels down here. 2 weeks ago, you would never have thought we would have been down here, but there we go. All right, now is often when we get a major collapse of a pair, or it sells off like 500 pips a day or more, sells down 500 pips in a couple of 15-minute candles, it often hits a key level of support, or false breaks a key level of support, and that day can often be a significant low in the market for that pair. So this could be a significant low to actually move all the way back up. All right, so you have to monitor it. Difficult to trade at the moment, but we are starting to claim back. This is a weekly level of support. It's wanting to move back above there. And 156.07. Just need to go to my, that's this top over here. So there's a few old tops that we're moving back down towards that can be support or resistance. So that should be resistance at the moment as we're below it, 156.07. So there's 3 areas of resistance there at the moment on the day chart. Daily, what was support, this weekly support, another level of weekly support. So if we start to, if we close above these 3 levels today, we've traded above it today. If we can get above, then we may well start to see a move back up to this weekly level at 159.44. Now, to the 4-hour chart, it is actually putting in a higher bottom here. If you know if you were at my 4-hour entry, candle entry, there was a 4-hour candle entry on the break of that candle today. If you wanted to get long with the idea that this is going to move all the way back up the range, break above that candle high, stop below the low would have got you in. Very similar on the pound dollar as well. So very volatile. The actual trend on the day chart is down, but often when you get this massive rejection, it will reclaim the loss that it's created. Would continue up through these resistance levels. That's the last weekly level that we formed that we broke below. All right, some other old tops over here. Could be resistance through this area too. All right, so manage your risk. If you want to trade something like that pair at the moment, manage your risk. All right. Look, there was a nice entry this morning on the 4-hour chart, but it has to look good structurally. If it doesn't look good structurally, don't just think I want to try and get in on a very poor structured approach. So you could be at break even now as it tries to negotiate this resistance area. And if all it does is just fall back down, well, you had a look and you have a break even trade. Pound dollar. 104.63. Major, this is a low of the currency pair. All right, according to my charts. And he did respect it intraday yesterday once it came back above. So maybe this is a very significant low for the pound. There's lots of talk that we're going to go to parity and below parity and so on and so forth, but we've had such a heavy sell-off that could be the significant low for a strong correction. So my levels, yes, we could come back down to 104.63. If you saw good structure down there, you could trade a reversal from that level. I'm going to show you what it looks like on the 15-minute chart from yesterday. We've broken below day support, 113.50. When I last did my webinar last Thursday, I was discussing would that level hold as resistance. And so just look for a good setup at that level. And I think on the 15-minute chart, it touched it or tested it 3 times on the 15-minute chart and turned around. So I don't know whether they retraded there, but of course it had a nice collapse afterwards. So we've now got resistance at 113.50, 114.09. 114.09 is a major low just here. We could bounce off this major low up to the next major low that's been broken, okay, quite easily. All right, so What happens up there, though, if we get there, you'll have to look then to see whether those levels act as resistance. So if you're looking for levels to trade around, from the higher time frames, there's a big gap between them at the moment. You might need to be patient. 4 hour, I actually traded this today on a 4 hour candle break at 106.25 through here. I'm at break even, so if this doesn't want to go up, I've had a look and I could be risk free. Slightly could be that we've already bounced down here and we won't revisit. Yep. It all depends what comes from the market. There's talk that, is the central bank of the UK going to have like a snap interest rate decision? If they do, what does that do? So anything could happen. So, I mean, I say I'm risk free. If something comes out of the gaps, well, I might not be risk free, but I do have a trade risk free at the moment. And I'm just hoping that this just now wants to drift all the way back up to the resistance up here, but I'll just have to wait and see what it wants to give me. But to that major level yesterday, these are the levels you want to study, because you're going to see this happening at major levels. But can you see what's happening and take advantage of it? So we broke below 104.63 yesterday, came above, but then see how it became support to move up. All right. So the market was definitely watching that support level on the retest. So this dropped like, I don't know how many pips in 2 candles. 400, 500 pips, something like that. Was it 1, 2, 3, 4? In about 45 minutes, it dropped 500 pips. But obviously it reclaimed it. And the market's just kind of asking itself at the moment, can it continue up? All right, it's struggling at 108, struggling up here at the moment, but it's just a little bit sideways. You can draw in a bit of a trend line channel here at the moment. All right, and similar across the tops. It's just a little bit like so. Is it going to hold this kind of flavor to move up, or is it breaking down from 10800? Hopefully it holds, because now that I've structured a really good entry, I don't want to get stopped out, but we'll wait and see. Now, I'm going to just go to my other charts, because what I do know is on my other charts, which shows me the weekly low of last week. All right, there's the low of last week. So it's definitely a headache for the pair at the moment. So break of last week's low is definitely acting as some form of resistance. The market could be saying, look, we don't mind it coming up to retest and kind of trade above last week's low, but we're not going to live above there for too long. We want to move this down to a, and keep it below last week's low. All right. So I'll just have to, see what the market wants to do. There's obviously the side of the market for this pair could be that we're going to reclaim the drop. Because let's face it, if it's down at 104.63 again, who wants to sell it down there? That's why it's already popped back up, because everybody knows this is the all-time low. Who wants to take a position at the all-time low? So whether or not, Slavia, you're asking me, it's going to retest, we'll have to wait and see. Often what does happen is we move back up to where we came from. But at the moment, the market can do whatever it wants because it's so volatile. If some more news comes out from the Bank of England that they're going to hike rates, I'm not quite sure what that will do to the price action. Theoretically, that improves the interest rate differential, but I don't know whether that really improves the economy. So, or, the market will react how it wants to react. So Slavia saying 3 times it's rejected up there. Yeah, quite obviously up there at the moment. go to the 50-minute chart here. It's holding there at the moment, but maybe it just needs a little bit of input. We got the US news coming out obviously later. Maybe it just needs a little bit of a poke to get above there. Or, maybe it's failing there. So you have to make a decision. Which side of the market do you think this is going? Is this now holding for another run down to test 104.63? Or is it starting to claim back the losses of Monday and Friday? All right. So we know where the bigger trend is, it's down. It's just a question of, is this market going to reclaim the big loss it's just had? All right, usually it does, but with such US dollar strength that we've been having as of late, and the way the market's been acting around, the strong US data, who knows? So you just have to try to, construct something that you're happy with, that offers you good risk to reward. All right. I mean, obviously this offers great, if you want to be a seller to the downside here, this potentially offers great risk reward down to 104.63. All right. So there's both sides that you can trade. I did get long this morning, seeing that higher bottom form on the 4-hour chart, just here, traded the break of that candle. So time will tell. But, know where the levels are. Resistance is at 113.50 that we held on Friday. Support is at 104.63. And of course, now we've got a lower level of support. And this level of support down here is at 103.00 on this platform. I've looked at another platform. I've got another platform on my other screen. And the low didn't get down to that level. So that's the other problematic thing, is when the market's not as volatile and we're starting to move down to retest these levels, on my other platform, the low got down to 103.41. There's like 41 pips difference. So depending on what platform somebody's trading and referencing their support and resistance, it can be a little bit difficult in these very volatile spikes because there's different levels on different platforms and traders are using different numbers. All right, so be aware of that too. All right, so I don't know whether we will come down here, but on the ACY platform, 103, let me just double check that number. It is we actually went down to 103.00 on the platform. As I say, on another platform that I've got charts on, it went down to 103.41. So different feeds, different prices. And now I've just adjusted that. And it's worth, even though I'm trading this pair today, it's worth definitely mentioning that these most volatile pairs, you don't know how to trade them. Wait for the volatility to subside a little bit. So, things get a little bit back to normal. Barry, why are the fees different? Because they're using different liquidity providers for the market. One broker is using, I don't know, 20 different liquidity providers. Another broker is using maybe some of the same liquidity providers, but maybe some other different ones as well. So it all depends. All right. All right. Let's go back to one of the charts. So New Zealand yen, this 81.55 level that I've got on here is a monthly top from over here. So we've obviously sold down like everything else. Back to the day chart here. But this is a weekly low here. This weekly low here. We're obviously folks breaking this weekly low here. This could move back up the range. When this weekly candle here broke that weekly low, we moved all the way back up to resistance. So we're obviously folks breaking that low, we could see a move back up the range here. All right. Now, if we close below, we weren't able to close really below that level, 81.55. we're certainly above it today. In any event, we need to, if this is going to move down to 79.44, you're going to see the day chart having to have a good close below that level. So at the moment, there's a higher probability at least to come back up to test this area, 82.96. Then what does that level do? Does it hold a resistance for a trade down? If we get above 82.96, which is pretty much 83, then it wants to hold above 83. So I'd be watching about for 83 at the moment. What happens there? If we're closing above 83 and then 83 starts to become intraday support, there's a high probability this is moving back up the range. All right, so I'm not really seeing anything to do there. I mean, if you wanted to be aggressive, let's say the candle today closes the way it is right now. A break of the candle tomorrow is probably going to confirm a reversal up with that very strong reversal candle. But you're trading up into that 83 level. But getting above 83, I'd then watch 83 to become support. So for our structure at the moment, it's still down. MACD is crossing up. There's a little bit of positive divergence there. So this could, look for the structure to form to positive. If you want to trade to the upside, trade the reversal back up. All right. So all these instruments are exceptionally overextended. There's a good chance they can move back up the range and reclaim the losses. All right, New Zealand dollar. This could actually come down to the COVID low here. It's not that far away, 54.68, but in the structure of price, it's very overextended. 79% retracement. We've moved below the 162. Now, of course, we could still move down to support, but if we actually don't rally on the weekly chart, just looking at my chat, Slav buying yen pairs at the moment with the possibility of a budget intervening. Yeah, it's difficult, but what happens if they don't intervene? Are you going to sit around for the next 3 months thinking they're going to intervene? So it's not easy, I know. So you have to decide, draw a line in the sand somewhere. At what point do you decide, okay, I'm just going to trade the yen pairs like I normally do, or do you just put them to one side at the moment? So yeah, it's difficult, but yen pairs have sold off. I know the dollar yen hasn't sold off too much, but the yen pairs have. So maybe the selling off of those yen pairs has just eased the situation a little bit, because of course other currencies to the yen are at better prices. So the yen's appreciated to a number of currencies, not too much to the dollar yen, but maybe that appreciation has just offset that risk of more intervening at the moment. But yes, it's definitely there in the back of the mind. Right, so New Zealand dollar could definitely move down here. If we continue with a risk aversion, the pound dollar drops another 800 pips, this will probably come down to meet this low. But then I would expect that low to offer some support. But this being very overextended, to me, you're either already short, waiting to take profits, wherever you think the appropriate place is, or what's going to tell you that this is reversing to take profits. Other than that, you're looking for a rally to be a seller higher up. All right. Now, the thing to consider, I'm talking about these pairs could rally so that you could look for an opportunity to sell. The more that we get to significant levels, we come to now to a significant level here. This moved up all the way up to here. So once we get close to this level, change of trend can occur and we can move all the way back up to where we came from. All right. With the Fed obviously raising 75 base points, but if we just start to see the Fed's data or the US data just start to downtick, and we see that their interest rates are doing their job, then we may see a shift in the pendulum to the US dollar not being as strong, or even starting to shift the other way. All right, we start to see inflation moving downwards, ticking down a little bit, but then other data is poor because of the high interest rates and they're going into recession. We might see a shift, especially when we're at historical levels. All right, so whilst I'm still looking at this structurally for a rally, so, you know, I'd be looking at drawing my fib now from that high down to the low. And looking for a rally. You know, 62, a bit above the 62. We've got 62.04 here, which is monthly broken support from over here. I know that's a long way away. It's like 600 pips away. So in all probability, there's going to be an opportunity. If that's where we're heading up to for a correction, the day chart's going to start to show upward structure, and you can obviously trade it to the upside. At the moment, it's not saying that. Clearly, it's just downtrend, but today we are having positivity on the day candle. So a number of pairs to the US dollar are having positivity. All right. So we may start to see 1, 2, 3 days up. We might start to see a higher bottom form. In all probability, let's get rid of that. On the 4-hour chart, you're going to start to see, it's not doing it yet, but the MACD is crossing up. We might start to see a 4-hour structure that looks positive, that you like the look of. At the moment, today's trading 57 is calling the market, but see how we're starting to want to be above the central pivot point, where for days we haven't been able to do that. So there's a bit of a turnaround. Intraday structure is turning around a little bit to the positive side because we're wanting to look at the central pivot point to become support. So over the next day, we'll look at 57 if we start to move up to become support. All right. So even if the day chart doesn't show you a higher bottom and you want to trade to the upside on these pairs, if we start to hold above the central pivot points on a day, look to the next day for price action to hold above the central pivot point or at the central pivot point. Look to the figures. Once clearly broken to become support, to offer support to move up. All right. We may be just getting a positive shift to the upside on some of these pairs. All right. Of course, by the end of today, we could well be back down to the low. And what I'm saying here at the moment in terms of seeing some positivity just evaporates. But you can see here yesterday, we weren't able to get to the central pivot point. And the day before that, fractionally above, and then we were down all day. So today, the tone is definitely different. We're wanting to be above the central pivot point. All right. And, you know, that when you start to see that intraday structure, you know, it's telling you something. Because the central pivot point is the average price of yesterday. It's the high and low of yesterday's daily candle. High and low plus the close divided by 3 kind of gives you the average for the day. So today, the average price of yesterday, price is wanting to be at the average or above. All right. All right. So this to me looks like it wants to move up today at the moment. Can we break above 57? Look tomorrow for 57 to become support. All right, dollar Canadian. It is holding where I was discussing before. So I've covered that pair already. You know, you just need to make your decision. Do you want to trade it or not? Do you want to see more confirmation on, you know, I did my video today saying I'm looking for a lower top on the daily chart to form. But again, intraday structure wise, if we start to see that the central pivot point wants to be resistance for the day and price action wants to spend its time below the central pivot point, rallying back up to it become resistance, then these are the areas where you can look to get an intraday sell, even though the day chart trend is up. All right, you know, if we clearly close below 137 today, look at 137 to be resistance tomorrow. You know, look at the central pivot point to be resistance tomorrow. All right, dollar yen. Now, let's have a look at the monthly. squash it in. We've only got one major level on the monthly level to get to at the moment. Well, there's more than one to the left, but this one on the horizon at the moment is 147.68. So clearly the bodge is looking at, if we get up to there, maybe the bodge will come back in and intervene. I think the bodge is hoping that they did some intervening on last Thursday from memory, and that might be enough for people to go, oh, I don't want to be buying that anymore, the dollar yen. All right, so that price doesn't move up. All right, or maybe their intervention is pointless because the US dollar is just too strong. However, next key level, if we keep moving up, is at 147.68. All right, this is another level we've moved above, 142.17. That's weekly support there at 139.38. Now, candles are definitely rejecting up there at the 144.99 level, the 145 level, the day chart up here. There's the intervention on that day. Of course, we've moved back up almost to the highs. Now, if you've been doing your work, there's a 79% level here. After the drop, 144.71, hasn't gotten back up to the double top. So I don't know if it's going to work, but this is clear resistance at the moment. It's come back up to the 79. Is this where the market's going to hold to move down? All right, so you could be selling at the 79, stop above the high. There's definitely divergence on the day chart. Divergence on the 4-hour chart at that top. Structurally though, intraday is still positive because see how it's getting support at the central pivot point? So it's not breaking down. I was going to say, think about trading this to the downside at the moment. I'd like to see the intraday structure being negative. Central pivot points offering support. All right, I'd like to see price action where, in a trading day, we open up. So let's say this is tomorrow's trading day. We're opening up below the central pivot point. So here, this is where we're starting the price action here. And we can move up to a central pivot point and we start to see failure to trade down like so. We're not seeing that. See, today we're opening above the central pivot point. We're just drifting down to the central pivot point for support. We're not seeing the change in structure intraday. All right, so can it start to close so that intraday, when you start to see the candles forming as we get into Asia, the new pivots, prices below the central pivot point. Can then the central pivot point offer resistance for you to trade down? All right, so seeing this structurally, who was asking me about intervention slide, seeing this is structurally positive for me at the moment, even though at the 79% level. Now, over the next 24 hours, structurally, it might change intraday. But if this stays structurally positive, then all those other yen pairs that have been stretched to the downside have the possibility of moving back up. All right. All right, I don't think I did cover the dollar index, but I didn't look at the S&P 500. Now, this is what might create some positivity. For example, the New Zealand dollar crosses, the New Zealand crosses, the Aussie crosses, is if the S&P 500 has a rally, this is a monthly level of support here. Is it going to hold here? Is support going to hold for a relief rally here? Might be only a minor relief rally. Could be a major relief rally. This could be the bottom. This could be the bottom to, come back, challenge that top. Or this could just be a short-term bottom to rally back up to this level. This is a weekly level of broken support. So we're just seeing a little bit of stalling here. So over the next week, do we start to hold here to move up? If this moves up, we're going to see, I'm sure, a little bit of sell-off on the dollar index and the pairs to the US dollar moving up. So watch what the indices are doing. I know the ASX is a similar level. I covered this one today. On the monthly chart, it's at the 62% level of this range. There's the monthly low, similar to the one I just showed you on the S&P 500. And whilst I know the trends are down, but support's enough to stop the trend. So the monthly trend and the weekly trends are down on these indices. But yesterday we paused on the 62% retracement level, couldn't get down to support. There's lows here. You know, this could at least come back up to broken support here at 67.39. Of course, over the next month we could move down through, but I'm just seeing a little bit of pause. So we might see a little bit of pause to the downward moves that we've been seeing on the currency pairs as well if these indices pop up. Slav asking, were there any possibilities to execute trades last Friday? I was watching the graphs move down, but didn't get in during the most active part of the trading day. You mean you didn't see a setup, or you couldn't, or you were trying to click in and it just wouldn't let you? You just didn't see a setup? Well, there wasn't like a. It all depends what you want to trade as a setup. I can see here that we move below this pivot. That pivot became a resistance. So to me, there's a breakdown. All right. We move below the figure here. So, and that's the previous day's low. So we break below the previous day's low. That becomes resistance with the figure. So you'd have to trade that at as a level, stop above. So I mean, there were ways of getting in. It just depends on what way you're looking at getting in. Is the thing. The better day was the day before. Thursday when I did the webinar, I was discussing the 113.50 level. See how it touched it 3 times? Even though it was volatile from the Fed's day before, you know, this was where you should have been looking to get in if you wanted to get short. Of course, getting in there, you don't know it's going to collapse like it did, but there was an opportunity to get in on Thursday. And then, of course, Friday was difficult because the thing just went south very, very, very well. And then, of course, it went further down on Monday. All right, so that's how you could have gotten in. It all depends what kind of setup you're looking to get in on. Wasn't that easy, though, on Friday to get in. All right. All right, let's have a look at gold before we go. Still in a downtrend, gold, isn't it? Still moving down. It's getting a little bit to the end. If you're using the fib as a measurement of the move, we're at the 127 extension on the weekly chart. This being a key level of support that was, you know, is that now broken? And we should just be looking at that now as resistance for a rally. So 1676 is the level. So at the moment, structurally, this is just in downtrend. We've got daily support broken there. So we were very much range bound last week. can't get this fib to highlight or move. So range bound break south. Definitely look for the base of that range now, 1654, to be resistance. All right. If this does pop up, it is going to show you some divergence there on the 4-hour chart, but the line in the sand was 1676 to be resistance to keep the movement down. Next line in the sand is 1654. So any movement back up to 1654, you should, if the sellers are still in control, they should be able to hold it there to move it back down. All right. Now, from a continuation point of view on the 4-hour chart, there's a smaller range here. All right, just dropping it down to my 15-minute. We've already had a 62 retracement there. It is showing, as I was saying to you before, I just want to get rid of the figure off this pair because it doesn't work that well on gold. All right, structured over the central pivot. See how it's like the other pairs, wanting to be above the central pivot point today. So I'll be less inclined to use the fib that I've just drawn. I'd be more inclined at the moment. Of course, this could be looking to move up from the central pivot point today. Of course, that's counter trend. But the area of resistance to watch, you can see once we broke below it intraday Monday, check myself Friday, broke below Friday, became resistance. So, moving back up to 1654, that will definitely be the area to watch for resistance to trade down from. All right, so that's my thoughts on gold. Still in a downtrend. If there's anything negative to that downtrend, is just this 4-hour chart. If this MACD crosses up, it's positive divergence. Some of those pairs to the US dollar starting to show a little bit of 4-hour positive divergence too. So we might be seeing a little bit of upward pressure over the next few days, but 1654 is resistance there. Can watch that level. All right, any more questions? While I'm waiting for a question, just want to see what's happening on these 15 minutes. Looks like the market's quieting down, waiting for the news to come out at midnight from the US. A little bit. Olufemi, could I please explain how to use moving averages effectively in trading? I don't know if you can use moving averages that effectively. I don't think you can use crosses that effectively because they're too slow. All right. Moving averages that I've seen effectively in an approach. All right, I'll give you 5 minutes because we're past the hour. I've used moving averages this way many years ago, which worked quite well, but I don't use using crosses of moving averages are way too slow. All right, so I would use an exponential 200. You can make it whatever color you want. Let's just use a color I'm not using on the chart. Magenta. And I would use, doesn't really matter what the number is. It could be a 30 or a 40. Either one will work as well for how I'm going to show you how to do it. So I'll use a, I don't know, greeny color. All right. Now this will work on any time frame. It works quite well intraday. It'll definitely work end of day. All right. So when you're using the 200, and then a quicker moving average like the 30. Really, when the 30 is above the 200, the trend's up and vice versa. All right, so when you get the cross, upwards is called a golden cross, downwards is called a death cross. What you'll find is once the 30 is crossed above the 200, price will come back to the average. See the 200 here, get support. Get support here. Then it starts to get a bit choppy through here, but once we get a clear movement down, see how through this area the 200 becomes resistance, and then we've been moving down. All right, so that's how I've used them before. I've used the same kind of theory. If you go to the 15-minute chart, you can use it on the 4-hour chart, for example. And what you're looking for is just price to be coming back to the larger average. That larger average becomes resistance, and then you structure your trades down from that level. All right, so you know whether or not this can get back to the 200 average here. So at 115, we know we were at 117 not so long ago, so it could definitely come back to the average. And same sort of theory on the 15-minute chart. See at the moment on the 15-minute chart, price is being held at the 200. All right. So if we see the 15-minute moving average cross, price break above the moving average, see how the 200 clearly held the market there within a pip. In all the volatility yesterday, the 200 moving average is very exponential, was very good on the 15-minute chart, calling the intraday area of resistance there. All right, so maybe it's holding here at 200, ready to move down. All right, that's how I would use it. That's how I've used it before. I wouldn't use just crosses of moving averages, they're too slow to give you like a signal to do something. And is it you, Bill? Do you think Daryl, do you think we'll have any issues with what's going on with MT4 and T5? Well, I'm not sure who's banned it on Apple, whether it's Apple that's banned it or it's MetaTrader company itself. Still available. You can still, if you've already got it on an Apple product, you can still use it. You can definitely download and use it on an Android device, and downloading to PC to a normal Windows PC environment is still available. So whether or not there's going to be other things constrained, I don't know. You'd have to contact the account manager, the trading desk, to get full clarification, because I'm very remote from the internal day-to-day workings of the brokerage. But I do know that they put a statement out on the website today saying, I don't know if I still got it. Let me just type in here. I'm not exactly sure where it is, but we put a post out somewhere today, yes, saying that it was not available now at the Apple Store. Now, whether or not that's long-term or short-term, as long as if you've still got it on your phone though, or your iPad, it'll still work. All right. That's about as helpful as I can be, because that's all I know. All right. Any other questions while you're waiting? Just to let you know what's coming tomorrow on the webinar front, going to be taking you through. It's quite a simple webinar. I've already discussed really the topic in general terms countless times, but I've structured it as a webinar, is the 100 pip entry, how I structure trades positional wise using 100 pips, stops, and I'm not quite sure why this isn't going to work. At the moment, it's saying we don't have any webinars, but there are. So just come back to this page a little bit later. So tomorrow's webinar is on positional trading using 100 pip stop. How do I do it? How do I structure it? I structured one today on the 4-hour chart. But just come over to the web page. I'm not quite sure why it's not working. Maybe my cache needs to get cleared. Oh, there we go. It's updated now. So the 100 pip trade entry, I'll take you through that entry. All right. And how I do it. Sometimes I trade exactly at a level when price gets there. Sometimes I wait a little bit before I trade. So I'll discuss how I do things. But I have a very simple approach about using 100 pip stop. In today's market, if it was very volatile, maybe I might use a 200 pip stop. But under normal conditions, 100 pip stop will more than suffice for a position trade entry as long as you're structuring it properly around structure. So I'll show you how I do it. I've discussed how I've done it before, but it's a webinar on that. I'll show you a few examples of how I've done it before in recent times. So that's coming up tomorrow. All right, everybody. So make sure you're managing your risk. If it's not clear, you don't have to trade. If it's too volatile, you don't have to trade. It's all about managing the risk at the moment, not being in half a dozen trades at once. All right, the volatility will subside, I'm sure, over the next couple of weeks to a much more acceptable level. All right, everybody, thanks very much.